this strategy, one of the big things that you're going to want to look for is days on market, right? So if you have a house that's been on the market for one day, it's fully remodeled, and they just had an open house that weekend, our strategy isn't going to work because that house is going to sell at list or over list. There's still that opportunity. But now if this house was sitting on the market for 30 days, well, we have a pretty good shot, right? And so it really just depends on the timing of how long it's been in the market, and you're going to want to work with your agent pretty closely as your buyers are out there looking. Now, if you identify a buyer that, let's just say you have a 580 FICO FHA that you're trying to get into the market right now, and you qualified them for the max loan amount of 562, right? Are you going to send them out looking at 600? Probably not, right? So now I'm going to tailor their expectations, and I'm going to lower their purchasing power to maybe 550 or 560. And the reason why I'm going to do that is because I'm going to leave wiggle room for my strategy. Now, when I'm talking to my agents, I'm saying, hey, guys, look, yeah, they probably qualify for like 585, which at 3.5% down will get you to that 562, right? Or it's like 3.6%. But let's not do that. Let's lower our expectations. Now the agent knows that we need to get seller credit in order to make the deal done because I'm prepping my buyer's agent. So when I'm doing this, I'm very conscious and very communicative with my partner so that they can go and identify a house that we have a high likelihood of getting. Because otherwise, like, we're going to go try to do this on a brand new house that was built in 2018 and is fully remodeled. Like, it's not going to work. So, and it's going to just discourage your buyers from trusting you on your strategy. All right, so how much can we add? All right, these are key right here. On FHA, you can add up to 6% of the loan amount. Okay? So if I'm on the same example and I have a $600,000 purchase price and I do 3.5% down, not counting the MIP, I can get $35,724 in closing cost credit. This is a max seller contribution. That means the buyers cannot get more than this. If they get $40,000, you can't use $4,276. On VA, they max you out at 4%. So same idea, 600,000. Actually, I went at 617 on this because I wanted to leave room for my price stack. You're at 24,680. And conventional, if you're doing 5% or 3% down, you're maxed at 3%. But if you have over 10% down, so below 90% LTV, you can actually increase that to 6%. And I actually just found that out, so it's like literally like a week ago. Otherwise, I always capped it at 3%. Now, go back one. Okay. So what are you going to get when you go to 600,000, right? Again, back to the type of property. So what am I going to do? I'm going to stack my closing cost on there. So if I know that my closing cost on 600,000, right? I always hate when lenders do a percentage because it's absolute bullshit. Like, I just give a generic number. Like, there's so many things that can go into your closing cost. So let's just say 2%, right, of my closing cost are $12,000. Okay, right? It's going to be less than that because of the down payment. But let's just say $12,000. So I have some options here. Depending on how long the listing has been on the market, I can either go up those $12,000, right, and now offer $612, and then ask for the seller to give us a credit towards reoccurring and non-reoccurring closing cost of $12,000. But again, this house has been on the market for 30 days in this example. I can just say, okay, well, my buyer is probably feeling like, dude, I'm overpaying for this property. Well, you're paying list, but let's try to get a little aggressive, right? So maybe we offer 605, and that's for 12,000 back. Now the seller's getting close to their list, right? The agent's happy because they sold over list. That's what they're going to be bragging about. I got 5,000 over list price in this market, right? But in reality, the seller netted $7,000 less, and the buyer got a house for $7,000 less than what the list price was. So jump to the next one. All right, so go back one. All right, so given that we have the ability to get this much credit, right? Like right here on 600,000 closing costs, if we don't have any lender buy downs, 17,000, you're getting close, right, to covering all closing costs. You don't have a lot of wiggle room to wrap closing costs and the buy down in here. But here and here you do, right? Here and here you have the ability to not only wrap in closing costs, but also a buy down. Right? And so what's a buy down? So I'm gonna use some of this seller credit to lower my interest rate. So go to the next screen, right? So this is today's pricing, right? So here's a percentage cost, and here's the actual cost of the rate, right? So as we go higher in rate, right, we're hitting 6.125, the buyer's getting a credit of $34. Right? But where am I going to price this loan out at? I'm probably going to price right here at, like, if I'm going at par, and I can only get closing costs at 5,625. So principal and interest payment of $490. Right? Now, this cost right here is $2,700. If I wanted a rate of 4.625, what's my cost? $16,000, so that's a $14,000 delta. Right? But the buyer would ultimately save, right, from $34.90 to $31.40. That's perfect. That's exactly $300. Okay. So what am I going to do? How do I get this client this rate? Well, I'm going to stack these $16,000 onto their purchase price. So now, if I have a borrower, assuming that they have the money to cover their own closing cost, I'm going to stack this entire cost right here to the closing cost and to the list price. So now go back to my listing. Okay, not my listing, but the listing I'm using for example. So if I offer them $620, right, with $20,000 back, assuming it's not conventional, or I offer them $617 with $17,000 back, because now I can use all three loans as an example. Now I can use that to buy down their rate and save our buyer $300 a month. So what's the pushback, right? So you're going to get two pushbacks. The first from the buyer is like, well, now I'm paying more for the property. But the reality is people don't look at prices anymore. We learned that in 2020 when rates dropped. No one cared that they were paying $100,000 over list. They cared about a 2.2 rate with a mortgage payment that was astronomically low. People are more concerned about their monthly payment than they are about the purchase price. And so what is $17,000 on 600? What's that going to increase your payment? Right? I generally say about $60 for 10 Gs. So you're probably looking at about an $80 increase. Well, what's that going to do? That's probably more than that. You're still at a net of $220 in their monthly payment. Right? The buyer is saving money. But what else did that allow you to do? Right? That allowed you to qualify for more money by going into this strategy. So your buyer now, instead of maybe qualifying only for, say they only qualified for 580, right? But now you just lowered their purchase, you just lowered their rate and monthly payment by $300. Now they have enough in their DTI to cover the next 20, 30, 40 Gs. Right? So it's a nice strategy to be able to get them more money. And if you're working with the right agents, you'll be able to let them know up front, hey, if we do a buy down and you structure the deals correctly, we're going to be able to get you an additional 50 grand in purchasing power. So go back to my rates. Right? So this is a prime customer, 700 conventional. I mean, this is A paper stuff, right? Like, a lot of times right now, because of the way the mortgage coupons are set up, every deal is going to have a cost. And that's just the times we're in. Lenders are hedging super hard, and that's why the mortgage coupons are all fucked up. And you see some at $4,000 cost, $2,000, $3,000, right? It's not in a linear manner. So you guys as lenders have to do your job to identify what's the right rate. Why would I offer this rate right here at a $2,500 cost of 5.8 at 5.8 when I can offer this one here for the same cost at 5.625? So you just have to be wary about that. This is a super good strategy. Go to the next slide. Right, so then how do I sell it? The first thing is you gotta know your buyers, right? So that's why we do the high trust interview, the HTI. On the HTIs, all of my HTIs now, I go through this. I go through this exact buy down scenario because I want them to be super prepped as they're going out into the marketplace. I wanna make sure that when the agent is showing them, that they know already, like, hey, we're gonna go over list. Like that, there's no questions, there's no doubt, there's nothing that they can push back because I've already sold the client. So what am I selling them? I'm selling them the monthly payment. And then I'm selling them the vision, right? Like, yo, look, right now your purchase price goes up 10 G's. Like, it's okay because your monthly payment's gonna drop. You're gonna net out $220. That's what they wanna hear. Or you're gonna get more purchasing power. They're really not paying attention to the overall purchase price. Some of them will, but then you have to be honest with them. Hey, well, I'm paying more for the property. Yeah, the reality is you are. And like, how long is it gonna take you to make up that money, right? So if you paid $10,000 over and you save $300 a month, right? What's 10,000 divided by 300? So I don't know. On 9,000 it'd be 30 months. So about 3 years. So if you refi within 3 years, you lost. You lost money by doing this strategy. But like the cost benefit of having this extra $200 every month in your pocket for an FHA, a VA borrower, you know, the reality is they probably rather have the extra $200 in their pocket. The next is a buyer's agent. You gotta be able to work with a buyer's agent that understands exactly what you're doing. You know, our regional and I went back and forth on the buyer's agent. And we went back and forth because it was like, well, do we prep them? Do we not prep them? And like, I was like, no, you always prep them because they have to be your advocate. And he agreed that we should call the buyer's agent, but it was like, how much do we give them? Right? How much information are we gonna give the buyer's agent? I give them the whole thing. Right? Like, I don't mess around. Like, I'm not gonna hide stuff. Like, hey, I'm trying to charge 2 points on this loan, and that's why I'm offering an extra 10 G's. Like, I'm not gonna play that game. Like, yo, I need 20 G's in order to make this deal work. Make sure you stack that onto the purchase price. And the final one, the hardest one to sell, is a listing agent. Right? Most listing agents, right? They're not probably gonna understand that, or they're gonna think that the loan is weak for whatever reason. So it's your job as the lender to call the agent and prep them. So there's two really thoughts, right? You can either call before the offer goes out or after the offer goes out. When I call before the offer goes out, a lot of times I get a listing agent that's like, why the F are you calling me, dude? Like, I don't even have an offer, don't waste my time. So I just call after the offer goes out. And when I call the listing agent, again, going back to how I sell it, I'm just like, yo, this is what we're doing. Like, my buyers qualify. I'm trying to get their closing costs covered, and I'm trying to get a rate buy down. That's why I'm stacking. And then you do the math for them. You go, look, you're gonna sell over list, which is what you want, and your seller is gonna net out the exact same thing. You're just doing us a favor by being able to stack this on top so that the buyer can get a little bit more credit. They can get a lower monthly, and this benefits everybody in the transaction. Sometimes I even throw like, look, you do this for me, like this loan goes with no hiccups. And they usually, just the fact that you called, they'll eat it up. But once you give them the strategy and you tell them everything that you're doing, they really like that, and there's no pushback. A really savvy agent, the final thing is gonna push on one thing. What if it doesn't appraise? Right? What if the whole thing doesn't appraise? Then all these people you gotta call and say, hey, I know we stacked 10,000 on top, but we only appraised for 600. We're not gonna be able to get that credit. Or I've gotten on conference calls with these two parties right here when I had a low appraisal, and I say, hey, we appraised $10,000 under, we gotta lower that purchase price, or meet us halfway. hey, we'll take a concession of half a point. You guys pitch in or get the seller to drop it. We don't want to lose escrow. We've been in escrow for 11 days or whatever. So that's where the strategy comes in. Can it blow up at that point? It absolutely can, but that's why you got to make sure you have your contingencies in place. In the marketplace that we're going into, it's not going to be uncommon for the agents just to be happy to have an offer in. And it goes back to the same thing. You got to be very targeted on which properties you're going after. Because if it's a highly desirable property, they're just going to kick you out. I've been really fortunate and not had any appraisal issues in a long time. Really, after the 2020 craziness and going into 2021, I stopped having appraisal issues out here. He's a witness. I just did this and I got 25 grand back for a FHA borrower that didn't even have a DU approval when they submitted the offer. And like, it was just the sell of the client, making sure Jeff knew exactly what his role was, and the listing agent talking to her and saying, this is how we make this deal work. And she said, FHA deals always get declined halfway through. I said, mine won't. And then you'll see FHA deals. And that little bit of snarkiness and like cockiness really helps solidify that. Go to the next. I think that's it. Cool. That's it. I mean, ultimately, it's super simple. Figure out what your rate buy down is. Add that to the other side. Look at how long the property's been on the market and prep everybody involved in the transaction. You guys have questions? Cool. All right, that's it.